Did you know that the stock that delivered the highest return ever is the tobacco company Altria Group, which until 2008 was a part of the Philip Morris company? If you invested $1,000 in the stock in 1968, you would have $7 million 50 years later. And what company in the world has the largest profit? Apple? No. The most profitable company in the world is China Tobacco, that logged a record $240 billion in profits in 2021, more than double global top earner Apple's $94 billion. Most likely you didn't even know about the existence of this company. It is invisible for foreign investors. It doesn't appear in the revenue-based Fortune 400 list or any major corporate size-based list for that matter, because it doesn't publicize financial data beyond profits. In general, the tobacco sector has significantly outperformed the S&P 500 for many decades. There is a popular opinion that investments should be ethical. Many people do not like to invest in the tobacco sector and other companies that are doing something harmful. I don't buy tobacco stocks either, for one simple reason. When we buy shares, we hope that the company will do well, its products will be used more, and I don't want people to smoke more and die more. World Health Organization experts say that the tobacco industry is called the deadliest industry in the world. According to them, the consumption of tobacco products caused the death of more than 8 million people annually. Of course, tobacco corporations often present themselves as ethical and responsible manufacturers. Companies seek to improve their image in the eyes of the consumer, for example by caring for the environment or organizing educational, social and environmental events. Despite what tobacco lobbyists say, the tobacco business is not profitable for the state. Reducing the number of smokers leads to an increase in the average life expectancy of the population and reduces the cost of threatening smoke-related diseases. Smokers are forced to visit doctors more often and spend more money from health insurance funds. The development of the tobacco industry and the increase in the number of smokers leads to a slowdown in labor productivity and demographic growth. The sector is inflation-proof as it easily transfers inflation to the consumer. It reacts negatively to key rate hikes as it leads to an increase of the return of risk-free assets, and the tobacco sector is presented as dividend stocks that are risky assets, as their dividend yield becomes attractive again comparing to the return of risk-free assets. The global tobacco market size was valued at $850 billion in 2021 and is expected to expand at a compound annual growth rate of 2.4% from 2022 to 2030. The demand has been sustained by the growing number of smokers in the developing regions of Asia and Africa. The expensive marketing campaigns run by the major companies have also been a significant factor sustaining the industry. The industry is witnessing a trend of new product launches which intrigues consumers to consume tobacco and thereby drive market growth. Now there are 1.3 billion tobacco users in the world and over 80% of them live in low and middle income countries. Looking at the historical statistics of cigarette consumption in developed countries, it seems that smoking trend peaked in the 60s, 70s and 80s, and we can witness clear anti-smoking trends since then. But this will not give us a complete picture. Before the popularization of cigarettes, people smoked pipes and other things, and now e-cigarettes, vapes, cannabis are gaining popularity. But in general, the global trend is still clear: the consumption of cigarettes is declining. Despite this and huge taxes, so far the tobacco sector shows huge profits. However, this may end in a couple of decades. Morningstar estimates British American Tobacco has approximately 30 years left before its legacy business model begins to fail. In this regard, tobacco companies seek to diversify their business as much as possible. It is a matter of survival for them. Philip Morris is trying to break into the pharmaceutical sector. British American Tobacco and Imperial Brands have interests in the cannabis market. British American Tobacco plans to sell only RRP, reduced risk products, nicotine, and cannabis within 30 years. RRPs refer to products that present, are likely to present, or have the potential to present less risk of harm to smokers who switch to those products versus continued smoking. RRP are currently unprofitable. Business restructuring is an interesting and multi-layered task. Probably soon we wouldn't call them tobacco anymore. The 5 main manufacturers control over 80% of the market. China Tobacco, the company I already mentioned before, is a Chinese state-owned company, which is the world's largest cigarette manufacturer, which provided 43.6% of the global market in 2019. Most of the products are sold in China. The company exports abroad only 1% of the produced cigarettes. China is the world's absolute leader in cigarette consumption, and this company has a monopoly in the country. Philip Morris International is an American company. As of 2019, it controlled approximately 13.9% of the international cigarette market. When the tobacco giant's parent company Altria spun off into a separate entity in 2008, Philip Morris International began selling its tobacco products only outside of the United States. In total, the manufacturer is presented in 180 markets. Geography matters a lot for tobacco stocks because of smoking trends, regulations, and foreign exchange. Half of PM's revenue comes from Europe. This company is vulnerable to strong dollar. The stock is available in New York and Swiss stock exchanges. So far, PM is the leader in RRPs. PM plans to have over 50% of sales from RRPs by 2025. British American Tobacco, based in London, is the third largest cigarette manufacturer in the world. It controls 12.2% of the market. The stock is available in London, New York, Johannesburg, and Nairobi stock exchanges. British American Tobacco operates in 180 countries. 46% of revenue comes from the United States, which means this company is less vulnerable to strong dollar. The company has diversified into various fields at different times in its history. British American Tobacco was expected to generate about 7.5% of sales from RRPs by 2025 at the beginning of 2022. But in the first half of 2022, RRP sales already reached almost 15% of revenue. Japan Tobacco is a manufacturer headquartered in Tokyo, whose parent company is Japan Tobacco International. More than half of the corporation's operating profit is provided by 130 international sales markets. In general, the company controls 8.5% of the global cigarette market. The stock is available in Tokyo Stock Exchange. The company also invests in RRPs, but the progress so far is not as impressive as its peers. Japan Tobacco's market share of the domestic RRP market has stabilized at 12%, almost unchanged relative to prior quarters, despite the new product Plume X rollout. The last company is Imperial Brands. It is a British company that presented in 160 markets and controls 3.5% of the international cigarette market. The stock is available in the London Stock Exchange. And the Imperial Brands next generation products are far behind peers. Imperial Brands next generation products revenues in Americas have been falling close to continuously since second half of fiscal year 2018. Management attributed in its NGP revenue decline in Americas to continued competitive environment with greater discounting, as well as uncertainty created by the FDA's ban on Imperial Brands' My Blue vapor products. If we look at the valuation ratios, we can see that Philip Morris is the most expensive stock among all these tobacco companies, while Imperial Brands is the cheapest one. But it's cheap for a reason. PM is the leader in NGPs, and the Imperial Brands is far behind. Since PM is so expensive, its dividend yield is the lowest among the 5 tobacco companies. Altria Group has the highest dividend yield, but its payout ratio is too high. The other stocks have about the same dividend yield of 6.7%. Altria Group and Philip Morris also look good according to efficiency and profitability ratios, but we should remember that these ratios are distorted since these companies spend a lot on research to develop RRPs. The balance sheets of these companies don't look that great, except Japan Tobacco. This company has a pretty good balance sheet. All the other have significant debts. That's all for today, and thank you for listening.